After just announcing an 1,100% increase in revenue year over year, we're taking a deep dive into QYOU Media with CEO Curt Marvis to provide an overview of his company and why investors should be paying attention to this stock. Curt, welcome, my good sir.
Yeah, good to see you, Brandon. Thanks for having me on.
Yeah, absolutely. And I'm excited to jump into this because we're going to get to that revenue in just a moment. That's a significant increase quarter over quarter compared to last year for that same term. But I'd like to start off first for investors who may not know of your story. Maybe they're hearing it for the first time. Can you give an overview of what it is that you've been building with QYOU Media?
Yeah, sure. The story of QU Media is a long one and it can't be answered in 2 minutes or less. We can get into more detail on some other call, but the bottom line is that my entire career and the career of some of my fellow founders has always been spent around what I would call youth media. Um, my last real job was I was president of digital at Lionsgate, the film company that was always kind of cutting edge in terms of things that were targeting, the teenage and early 20s, early 30s type audience. I was one of the largest producers of music videos in the 80s and 90s before you were born for MTV and part of that whole generational switch and done many things in that area. So QU Media was really started as a company. The name comes from we were going to queue up the best YouTube videos for you. That was the original idea. We're still in that a little bit, but it's changed over the years in terms of the history. But effectively where we sit is we believe as a company that the biggest video revolution probably seen certainly since cable and satellite television and maybe of all time is short form video content. That's what's on YouTube, on Instagram, on Snap, on TikTok, etc. And anyone who's 35 years of age or younger knows that that's the sort of everything they watch is coming from short form video content. That's what we call social video. The other side of the coin is what's known now as the creator economy. What is that? That's all the people that are partaking in social video, both individuals and professionals. I mean, you are, by my definition, part of the creator economy in terms of the financial marketplace. And so there's a whole new world that exists now for those creators and those digital content creators to deliver content that's targeting a specific audience and that's actually now increasingly starting to sell directly to that audience. So people are selling shoes and clothing and food and all sorts of other products directly as an influencer to that audience, which is an area that's known as social commerce. So we sit in between those two worlds of social video and the creator economy and all that's happening with that. And the main place on the planet Earth where we've chosen to do that is India. And so India is probably, I would argue, on the planet Earth, the place that's the most active anywhere, maybe with the exception of China, but I would probably argue it's even beyond that in terms of creation of both social video and social video consumption and the creator economy. And so that's why we're so excited about where we're positioned right now with respect to all of that.
Yeah, and I appreciate going into depth there. And like we said earlier as well, this is for an overview. This is for people to really get an understanding of your company. We're going to go into much more depth because, I had a great conversation with you about how it's come over the last few years and how you've come to this point right now. And quite literally, you were seeing that hockey stick growth right now in user base and in views and what you're able to do. But more importantly, in revenue as well, because you just recently announced $4.7 million in revenue in the 3 months ended September 30, which represents an 1,109% increase from the same period last year. What attributed to this substantial increase in revenue, and what pace of growth should investors potentially be expecting in the quarters to come?
Well, I think, look, that's an amazing number, right? And I'll talk about that in a second. But I also think maybe equally impressive from at least our point of view is that we reported the previous quarter 2.6 million in revenue, and this quarter 4.7 million in revenue. So to go from 2.6 to 4.7 is really actually, for me personally, what's the more exciting number, because the fact is that we expected a lot of the things that have happened in terms of our growth as a business from a revenue perspective and a viewership perspective to happen in 2020. Well, we all know what happened in 2020. This thing called COVID rose its ugly head up in the spring, just as our trajectory was beginning, and it really became problematic for us. We were just sort of about to lift off the ground, and then that crushed us back to earth. So in December of last year, almost a year ago to the day, is when we finally started to emerge from that and see the company start to grow. That continued in January of this year, but it was really in Q2 when we hit our stride. And kind of the confluence of distribution, audience viewership, and everything that we expected to happen really happened. And we've taken off since then. We're the fastest growing television channel in the entire country of India right now. We had advertisers in Q1 that you would have never heard of those companies. We now have Coca-Cola, Pepsi, Amazon, Procter Gamble, Unilever, et cetera, sometimes buying year-long deals for ad business with the company. So we've got, it's almost a night and day difference in terms of the business than where we were, not just from a revenue perspective. That reflects everything that's happening for the business. And to answer your final question, we expect a steep growth trajectory to continue on the same sort of path that we've been on. Do I expect 1,100% revenue growth, next year between this quarter? Probably not, because we've gone up, such a significant notch in terms of where we are. But are we expecting the quarter over quarter kind of revenue growth percentage wise that we've had, which was 81%? We're going to try our best to get there. And if we can continue at that pace, we'll be extremely happy.
Yeah. And, for anybody who is, again, just learning about your company, there's several different elements of it where we're talking about your QYOU Media channel. You've got a lot of advertisers on there. You've got your influencer network as well. And I believe a lot of these revenues that we're seeing right now, I think that's almost primarily India, even though you do have presence in North America as well. Am I right by saying that?
Yeah, I mean, the bulk of our revenue, which was not the case previously, is now coming from India. I mean, to give people, a sense, Q1 2021, 300,000 in revenue, Q2, 2.6 million, Q3, 4.7 million. And that's a very steep rise. But we also have a US influencer marketing business that has been doing well. It got hit by COVID very hard as well. That's resurrected itself and has now done over $1 million in revenue, or is in the middle of doing over $1 million of revenue for its third consecutive quarter. And so we're expecting that business to grow substantially in 2022. Again, as a company, everything we do is involved in the social video and the creator economy, both in the US here in our business and in India. But the thing I think that's most impressive in India is that TheQ, which is what we call ourselves in India, was maybe known by, a very, very small percentage of people there. We're a brand that people have heard of. If you go to Bombay and go walk into a club and say, have you ever heard of TheQ? The odds are probably higher than not that the answer, if they're 25 years of age or younger, is yes. And that's the thing that's really what's most exciting about driving our growth going forward.
Yeah, and speaking about driving growth moving forward as well, I know you and I have spoken about this before, and that's social commerce. Social commerce is an area of commerce that's absolutely exploding at the moment. Can you describe a little bit what you envision QYOU capitalizing on this growing trend, or how I should say, and do you think it can be one day, outpacing all of your media divisions that you currently have?
Oh yeah, absolutely. I mean, the sort of the blue sky of where social commerce is going to go, I think, is going to be extraordinary for the entire world. I mean, again, you're young enough, and certainly, teenagers or early 20-ish people, they're so accustomed to seeing things on Instagram or TikTok now that they're purchasing. It's unbelievable when you look at the growth of what's happening around that business. Social commerce as a word didn't even really exist 5 years ago. About 4 years ago, it started in China. Okay, just started in China. It's now a $300 billion business in China. $300 billion. Okay, that's how fast it's grown. And there are companies that are growing at that pace in India as well. One of the biggest companies in social commerce currently in India is called Meesho. Meesho started in 2015, did nothing from 2015 to 2020. They now have a valuation of $4.7 billion. Okay, so that business is the business, again, of these influencers, of these creators directly selling to you. And there will come a time, if you guys aren't doing it already, where you'll say, hey, everybody, if you haven't seen Fidelity's app and what they can do, blah, 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 and you're going to be directly selling an app to somebody and saying, I love this Fidelity app. This is what we use. You can trade small cap stocks on it, whatever it might be. Well, you're going to be getting paid for that, and you're going to be selling it directly to your community of listeners. That's exactly where the world is going. And trust me on this one, 10 years from now, me explaining this will seem ridiculous. It'll be like me explaining a television commercial to you. It'll be so commonplace that that it just won't be necessary. And when you think about India, with 650 million people, 25 years of age or younger, okay, 650 million, 800 million people, 35 years of age or younger, and a growing economy, growing use of cell phones, growing engagement with social video. It's it's sort of mecca in terms of the potential of what social video will become. So we're very bullish on it. We haven't announced a lot of the things that we're doing in the space yet, but in 2022, I think investors will get really excited about what we'll be talking about and showing them.
Yeah, and we're obviously going to be talking about a lot more as we continue to have these conversations and interviews and taking questions from investors, because it really is growing. I mean, myself personally, I never thought that I would be buying things through Instagram. I used to always, for whatever reason, in the back of my head say, "Oh, I'd never do that." I find myself doing it more and more often now because it's actually good products. It goes right through my phone. I can track it through my Amazon. It's so interconnected. It's so simple, and the returns. And so it's clearly something that's going to continue to grow. But you mentioned something there. You said going into 2022, and I'd like to end this interview speaking about that for investors who are hearing this story, or for investors who are currently invested in your company. What should they be looking forward to with QYOU over the coming months, and especially leading into 2022?
I think there's two things. I mean, I spent about 20 years of my career in and around Lionsgate, as I mentioned earlier. I mean, I had a company that they were a large investor in, and Lionsgate grew in two ways. I mean, when Lionsgate had $100 million, $150 million market cap, nobody was really imagining that they were truly going to pull off becoming a multi-billion-dollar, mini major studio at that time. And the way they did that was in two ways. First was organic growth. They took their television business, their movie business, their home entertainment business, and they all made sure that those businesses grew organically and continued to get larger and larger every quarter, every year. We're doing exactly the same thing with our India business, with our influencer marketing business, Chatterbox in India, and with our US influencer marketing business. Organic growth in 2022 is key, and we expect that to be very large. But the other thing they did is they acquired companies, and they acquired companies that they weren't bolting on something that didn't fit. They looked for companies where what we said with the Chatterbox acquisition from 4 months ago, it wasn't 1 + 1 = 3 for us. It was 1 + 1 = 11. And I mean, it sounds like a joke, but it really was that. Chatterbox is so important to us. It's going to be so critical in terms of our growth in 2022. So acquisitions is something that's on our radar. I'm talking to companies right now as we speak. I don't know if they'll come to fruition or not, but what 2022 will bring is you'll see very, very large and substantial organic growth in our current business units, but you'll see acquisitions that will occur that will drive that further and faster than we could do it just in an organic fashion. And that's our model.
Yeah, clearly there's a lot for investors to be taking in as they learn about your company, but also to be expecting over the coming weeks and months. Very excited for that and to be alongside you with that journey, helping investors better understand your company. Curt, thank you very much for your time. And I look forward to bringing you on again, because that means we have more information to be discussing about your company. So look forward to that time. But thank you once again.
Lots to talk about. It's great to talk to you, Brandon.